Those with a typical W-2 job want to know, what benefits does it bring to the investment table? Maybe nothing? Keep listening to find out.
So what does W-2 income really get you in the investment world? So, I mean, okay, yes, there's the obvious thing of you can go out and you can get a conventional loan, and it's going to use your DTI. Is it going to be the cheapest money? Yeah, it's probably going to be the cheapest money out of anything that's out there.
Yep.
Is a conventional loan. So that is a benefit. That's good if you want like one or two properties. Ultimately, Fannie and Freddie, they're going to limit you to a total of 10 conventional loans at any one time, and that includes your primary residence.
Yep.
So the method by which they're going to underwrite that is based on your debt to income ratio. So does your income cover all your debts and then some?
Yep.
They're
going to want you to be under 50% all day long. So
yeah.
$10,000 in monthly income, they're not going to want you to exceed $5,000 in monthly debts.
Yeah. That's
max.
Minimum credit card payments, minimum payments on mortgages, minimum payments on HELOCs,
student
car
loans,
payments.
That's a big bite right now. So
yeah, even if you're in forbearance or something,
doesn't matter.
They're still going to take 1% to 2% of that total student loan amount, and then they're going to use that as the monthly payment. So W-2 income definitely benefits you. Like if you want to get a conventional loan and it's your very first one and you want the cheapest possible option, yeah, that's a good one.
Do it. Support it. I recommend it.
How does W-2 income help like a fix and flip, do you feel?
There's no benefit. I mean, or limited. Because there's not any income validation. So those concerns that we just talked about for debt to income and all those moving parts, they're not a factor as to how you qualify. Now, does that assist in the risk of that project? Sure, 100%. Because having that regular income compared to a self-employed borrower who has to work for it, and the invoices could be coming in that month, and there could be lighter invoices the next month, that would kind of screw you a little bit if you're also trying to hold up a interest-only payment on your hard money loan.
Yeah.
Where you could protect yourself a little bit knowing that you have your W-2 income coming in. Outside of that, let's say fix and flip, not your jam, and we're looking at long-term financing. How does that help with the W-2 in regards to we have conventional, DSCR, and commercial?
So DSCR loans, there is no W-2 validation there, so there's not really a benefit there.
I will say, DSCR, if you're buying multifamily, if you go conventional, you're going to need 25% down, or you only need 20%.
That's true.
So that's something small little nugget.
We do have, now that I think about it though, we do have some interesting lenders that will get into unusual types of properties like cannabis or adult places. And they do have income validation for some of those. So that's so it can play into it, especially in the commercial space.
Yeah.
And that leads us to a really commercial lending. Yeah. So if we're working with because we work with a lot of small community banks, if we're getting into a long-term financing deal with a commercial lender, they're going to look at your entire picture, right? They're going to look at what's your income, what are your debts, how does the property perform, how, maybe there might be projections for something if there's some kind of value add situation there. So I would say for the average fix and flip loan or 1 to 4 family purchase, is there a huge benefit to W-2 income? Not really.
Yeah.
But when you get into the more exotic types of investing, it can play a role, and it can play a significant role.
Well, and especially if you're rate focused. If you're rate focused, then, in that scenario, commercial is probably your best interest rate. Very close to a second unconventional. But DSCR is not that far away. Right now we're probably a quarter to a 0.5% higher than conventional, roughly. Again, we don't offer conventional loans, so I can't speak exactly, but the last time I quoted it out, we weren't too terribly far off, and some of that will be factored by credit and LTV and the property itself, but I don't know that there's this ginormous difference in terms and conditions.
Yeah. And one of the benefits of the DSCR, you're closing on an LLC. There is no income validation. What's the hardest part about a DSCR loan? I would say the two things that are the hardest are the appraisal. So making sure that the appraisal is solid, or rather making sure that your concept of what the purchase price should be, make sure you're running comps on this property. So if you're working with a realtor, which you should be, have your realtor run those comps. Make sure that the price that you're paying is reasonable for what you're buying, right? So that's the first one. And then the second one would be the market rents. So if you believe that you can get $1,500 for that property, is that solid? So
is that what the market's saying?
Is that what the market's saying?
If you are to go to Zillow and put in for rent and go to your address or very close to it, do you see 1,500 coming up regularly, or do you see 12 and 18 and where are all those numbers coming in at, so that we're not being too ambitious? Because again, on a DSCR loan, the only way you're qualifying is based off of the cash flow of the property, and we can tend to kind of give you a worst case scenario. Hey, we can still get this deal done, but the rent needs to be $1,400. You were thinking 15, but good news is you got $100 worth of room to play around with. And I've been telling investors left and right, purchase or refi, go to the appraisal appointment, hand the appraiser comps for not only the purchase price, but for market rent as well. This is the only thing we're going off of. So this is your homework. This is what you need to work on, is making sure you attend the appointment, make sure you're handing them information to ensure that the transaction goes smoothly. But I think too often, investors hold on to their W-2 thinking that it'll matter, thinking that it will allow them to lend better. I don't know that that's so much the case. Now, I don't want you to jump out of your W-2 any sooner than you're comfortable, and you really want to make sure you're making a good decision for your family. But in regards to lending, I don't know that that's a huge factor, at least for us at LFG.
Until you get into commercial. That's the big caveat there. Because the commercial lenders, so like a small community bank, for instance, they aren't going to love somebody that's a professional flipper that's been doing it for a year and a half. You know what I mean? Yep. They, and even if you've been doing it for a few years, they're going to want to make sure that you have very solid income and that you aren't writing everything off on your taxes, and that you actually are showing some kind of income, you know? So, yeah. I
think keep your W-2 for those first couple deals, use your conventional loans, and then definitely, always price this out. I think as the market continues to change and develop, we always kind of get closer and closer to conventional, and then we go away for a little bit, and then we come back. So I think it's keep us in your Rolodex. We're always going to do what's best for you on the transaction, which is the great thing, because this is a relationship. This is a long term. We don't want to just do one deal for you. We want to do multiples. And the only way to do that is to ensure that every deal is set up in the best way possible.